Assalamualaikum warahmatullahi wabarakatuh, and hello everyone. Today in this video, we are from group 6 of Auditing to in International Accounting degree. We will to present about our presentation material with the title Audit Report and Auditor Opinion. But first, let me introduce myself and my group members. My name is Richard Julian Antonio, and the group members are Afelia Zahara, Fahri Zainul Mulyana, Olivia Renata Putri, and the last one Nelson Souza. So there are 5 learning objectives in this presentation. The first one is standard audit reports. The second one is condition required to issue the unqualified audit report. The third one is financial reporting and internal control under SOX 404. The fourth one is types of audit reports, and the last one, types of auditor opinion. And for the first part will be explained by Afelia Zahara. So Afelia, time is yours.
Okay, thank you, Richard. For the first is introductions of the audit report. An audit report is very brief and accompanying no more than a few lines because of its brevity does not knowledge in auditing may feel it's consisting little more than necessary legal formality. This result in the audit report is external report of only 175 words or work of 1,028 hours per client. This result in external report of only still fewer than 300 words. And the next is management responsibility for audit report. Next, please. Until 2002, corporate officers of public traded companies in the USA were not held be liable for misstated financial statement unless fraud could be proven. In other words, the officer knew it was misstated and that was their intent. So the officer, that principal executive officer or the officer, the principal financial officer, certify in each annual or quarterly report filed or submitted to the U.S. Securities and Exchange Commissions with the following. First is the signing officer has reviewed the report. And the second is the report does not contain any untrue statement of the mature fact or omit to state a mature facts. And the third is the financial statement. And the other financial information should be fairly present and all material respect it's the financial condition of the company. And the next is the signings of officer are responsible for establishing and maintaining internal control, have evaluated the effectiveness of the company internal control, and have presented in the report the conclusions about the effectiveness of their internal control based on their evaluations. And the next is the signing officer have disclosed to the company auditor and the audit committee of the board of the director. And the last is the signing officer have indicated in the report whether or not there were significant changes in the internal control or in other factor that could significantly affect the internal control subsequent to the date of the evaluations. Okay, next slide, please. The next is basic element of the auditor report. ISA 700 forming on opinion and reporting on financial statement. The auditor shall evaluate whether the financial statements are prepared in all mature respect in accordance with the requirement of the applicable financial reporting framework. These evaluations shall include the consideration of the qualified aspect of the NPP accounting practice, including the indicator of possible bias in management judgment. For the next is contents of the auditor report. The auditor report should be written and include the following basic. There are discussion in more detail in the balance sheet of these sections. In the auditor report should be have a title, for example, independent auditor report. And the second is an address as required by the circumstance of the adjustment for example, shareholder of the company. In the next audit report contents is introductions paragraph that identify the financial statement audit. The next is descriptions of the responsibility of management for the preparation of the financial statement. The next is descriptions of the auditor responsibility to express an opinion on the financial statement and the scope of the audit, which is the included reference to the international standard on auditing and the law of auditing, and descriptions of the audit in accordance with the DAS standard. In the next content is opinion paragraph containing expressions of opinion on the financial statements and reference to the applicable financial reporting framework used to prepare the financial statement. And the next content is the auditor signature. The next content is the dates of the auditor report, and the last is the auditor address. In the next is about the form of auditor report. The form of auditor report will generally be the form of the unmodified report, which traditionally consists of just 3 paragraphs. That consists from the introduction, scope, and opinion. But no, it may consist of several paragraphs so long the basic elements are covered: introduction, management responsibility, auditor responsibility. And the final paragraph, the content is in the standard unmodified report that the auditor conclusion based on the result of the audit examinations. And the next is about the modified opinion. An auditor report is considered to be modified in the 2 different situations. First is matter that not affect the auditor opinion, and the second is matter that do affect the auditor opinion. Okay, that's all my explanation. The next slide will be presented by Fahri. Fahri, time is yours.
Okay, thank you, Afal. I will continue this presentation about the condition required to issue the unqualified audit report. Unqualified audit reflect business financial statements that are transparent and compliant with generally accepted accounting principle or GAAP. An unqualified opinion is given after thorough research considering all accompanying financial documents. Any possible remaining discrepancies with the audit will stem from information that could not be obtained by the auditor. An unqualified report analyzes the internal systems of control as well as the detail in the organization's books. Additional names for unqualified audit often included unqualified opinion and unqualified report. Unqualified audit are performed with emphasis on detail and accuracy and according to accepted accounting principles. If an auditor has a reservation as to the accuracy of validity of a firm financial statement, a qualified opinion may be given instead that outline the auditor reservation. The alternative to an unqualified audit is an unaudited opinion. Unqualified audit are performed with emphasis on detail and accuracy and according to accepted accounting principle. Unqualified report conclude that the financial statement of a company are fair and transparent based on thorough research. In unqualified report, auditor will conclude that the financial statement of the business present its aware fairly in all material aspects. This opinion assumes that a business complied with GAAP and statutory requirements An opinion of this sort is known as a clean report. Standard unqualified opinion is also called as clean opinion. The auditor report with a standard unqualified opinion is issued by an auditor when the financial statements are judged to be free from material misstatement and presented fairly in a compliance with the generally accepted accounting principle. Besides, standard unqualified opinion is given over the internal control of an entity if management has stated responsibility for its establishment and maintenance, and the auditor has to carry out fieldwork to test its effectiveness. It is the best type of report that an auditee may be given from an external auditor. The condition for a standard unqualified opinion show the following. The first, all financial statements that are statement of financial position, statement of comprehensive income, statement of retained earning, and statement of cash flow are included. Second, the three general standards have been obeyed in all particular on the judgment. Sufficient evidence has been collected and the auditor has managed the engagement in a way that enables him or her to conclude that the three standards of fieldwork have been achieved. The financial statements are presented in compliance with generally accepted accounting principle. There are no situations requiring the extra of the explanatory paragraph or modification of the wording of the report. Okay, that's all my presentation. I will continue with Nelson.
Thank you, Fari. Now we'll continue this part 3, Finance Report and Internal Control under SO 404. The Finance Report in Internal Control based on SOX 404. Auditor Report in Control Internal include two auditor opinions that is. First, auditor opinion on whether the top management appraisal control effectiveness internal on report financial at the end of the period accounting has been presented fair in all things that material. The second, the auditor opinion on whether maintenance company in all things materials. Effectiveness internal control over financial report on certain date. The type of the opinion that will be obtained by the audit client on control assessment test internal by management are: the first, unqualified; second, unreasonable; the third, reasonable with exception or don't give an opinion. Okay. The auditor will issue audit report with a fair opinion without exception if non-identified material misstatement and not scope limitation auditor work. Unreasonable opinion will be issued if there is weakness material in the internal control company, while the opinion is reasonable with exception based on if the auditor is unable to determine if there is a weakness material caused by limit scope of audit of control internal, or due to the certain condition the auditor did not get any evidence that's sufficient. The section 404 of this Act, OXX 404, require company to review their financial report and internal control and declare whether they are effective or ineffective. In another word, they must determine if their financial report and internal control are adequate enough to produce financial statements that are accurate and complete. Smaller companies or non-accelerated filers are not required to file an auditor attestation. They are only required to file management assessment of the company's financial report, and internal control. The next slide will be explained by Richard.
Okay, thank you, Nelson. The fourth learning objectives is type of audit reports. Next slide, please. A company can receive 4 different types of audit reports. Auditors use the same methods to determine the audit type based on the outcome of their review. These reports communicate to business and investors with the validity and status of a company's financial standing. While all are similar in structure, each of these 4 reports shows different results of an audit, depending on whether the company used approved financial practice or not. And there are 4 types of audit reports. The first one is clean report. A clean report expresses an auditor's unqualified opinion, which means the auditor did not find any issues with the company's financial records. Unqualified express that the company doesn't need to meet any additional qualifications to approve its financial status. A company receives a clean report when it shows it follows the standards set by the GAAP. This is the most desired and common type of audit report. In the report document, an auditor express their belief that the company has a good financial standing and complies with the laws and governing principles of accounting. Most investors want a company to earn a clean audit report before they invest in the business. The second one is qualified report. A qualified report expresses an auditor's qualified opinion of a company's financial standing. This shows that a company has not followed all the standards set by the GAAP but isn't conducting its fiscal business is in an illegal or misrepresenting way. A qualified report means that a company must meet certain qualifications to have a financial status approved by auditors. Auditors may issue this report if there are certain business transactions or practice of which they are unsure. In the written qualified report, an auditor details what qualifications a company must address to comply with the GAAP. Qualified reports help financial management teams recognize what parts of their company need fixing to improve its financial status. Next slide, please. The one is disclaimer report. Auditors issue disclaimer reports when they have excused themselves for providing an opinion about a company's financials. When an auditor issues this report, it often means they felt the company prevented them from making proper observations. This may happen if a company doesn't give satisfactory answers to an auditor's questions or if there is a mistake in their financial records. If this happens, an auditor may feel they cannot make a definite decision about a company's financials. A disclaimer report allows them to distance themselves from a company if necessary and maintain their reputation as a fair and professional auditor. And the last one is adverse opinion report. An adverse opinion report often highlights fraud within a company. Auditors issue adverse opinion reports when they discover instances or irregularities or misrepresentations in a company's financial statements. These companies often have disregarded the standards set by the GAAP. An adverse opinion report alerts finance professionals and members of the public of a company's possibly dishonest practices. These reports also allow the company to address and improve its practices. And for the last part will be explained by Olivia Renata Putri. Olivia, time is yours.
All right, thank you, Richard. So for the next topic is types of auditor opinion. Next slide, please. Okay, the first types of auditor opinion is unqualified opinion. An unqualified opinion is given by the auditor if the auditor doesn't find a material error in the overall financial statements and the financial statements are in accordance with applicable accounting principles or SAK. In other words, the financial statements will get an unqualified opinion if they meet the following conditions. The first is complete financial report, complete required audit evidence, all three general standards have been fully followed in employment engagement, financial statements are presented in accordance with applicable and consistent accounting principles, and there is no significant uncertainty regarding future developments going concerns. And an unqualified opinion can be modified to an unqualified opinion with an explanatory paragraph or modified unqualified opinion when the auditor is required to add an explanatory paragraph to the audit report. Circumstances that make this modification, if it occurs, such as the first is there are doubts from the auditor's ongoing concept of the company or entity. Second, the company is less consistent in applying the accounting principles or standard use. And third is the auditor wants to emphasize one thing. And next is qualified opinion. When an auditor isn't confident about any specific process or transaction that prevents them from issuing an unqualified or clean report, the auditor may choose to issue qualified opinion. The auditor must express a qualified opinion when the auditor, after obtaining sufficient appropriate evidence, concludes that misstatements individually or in the aggregate are material but not pervasive to the financial statements, or the auditor didn't obtain sufficient appropriate evidence on which to base the audit opinion, but the auditor concludes that the effect of undetected misstatements that may arise on the financial statements, if any, could be material but not pervasive. Next slide, please. Okay, next is disclaimer of opinion. Okay, disclaimers of opinion is expressed by the auditor when the auditor doesn't obtain sufficient appropriate evidence to base the audit opinion. And lastly is adverse opinion. An adverse audit report usually indicates that financial reports contain gross misstatements and have the potential of fraud. Adverse opinion sends out a high alert that the company's records haven't been prepared according to GAAP. And both individually and in aggregate are material are pervasive to the financial statements. Pervasive itself is defined as an error that will have an impact everywhere or deep. So these are the present of class material. Back to the moderator.
Okay, thank you, Olivia. And that's all about our presentation. Thank you for all of your attention, and we close by saying wassalamualaikum warahmatullahi wabarakatuh.